Testing. How's that sound, Alec? You hear me? Oh, I might have to mute the YouTube. No, it's muted. Okay. Yeah, you let me go live? Okay, cool. What's going on, guys? No, anybody on yet? Doesn't look like it. Guys, I'm just giving it a few here to log people to log in. For those of you just coming on, if you want to just type in the room. We tried to do this yesterday, just had some technical difficulties, but I wanted to do kind of a Q&A session. There was a lot of people that liked doing that towards the end of the close when we used to do it, talking about other markets like stocks and the oil markets or treasuries. But these are nice sessions. You can go back and forth. Hey, buddy. What's up, Cameron? I don't know how many are going to join us today because we kind of scheduled it last second. Cameron, what are you trading today? Kind of slow. I mean, we had this rally earlier in the morning, and then I tried to move a little bit of coin around today. I don't know if it's one of the exchanges I sent it to, but it just seems really slow. I don't know if the network is having troubles. I haven't really heard anything. Did you guys? You're trading Ripple? It's had a big move today, huh? It's been kind of waking up. It kind of trades like some bigger money knows. I mean, this is pretty classic. Big run up, sideways, breaks down, comes all the way back to pi, and then it just quietly bases, and now it looks like it's breaking out. And that's going to look similar to a lot of other technical traders, so it's going to kind of be a self-fulfilling thing. We get above these highs, we should retest 7,500 level. What's going on, Scott? Other conferences. All right. When is it? You buy now and then you sell into the conference? the end of the month. Well, do you guys just want to run through the overall markets? I did this with the guys on my Forex team this morning. We went through a lot of these markets, and I don't think I did a video today. No, I didn't. But we can do that. Scott, what didn't work with NXS? I'm not familiar with ADX. Is that a coin, you mean? I don't know these guys. It does kind of look similar, though. It's a pretty standard pattern in crypto. You get the massive vertical move, pulls back, shallow bounce, lower high, all the way back to pi. This is in a new uptrend now. Oh, okay. Nice, Cameron. That one's bullish. I mean, the daily cycle's high. It's already had a pretty good move, you know. 1, 2, 3, 4, 5, 6, 7. There's an 8 count. I teach this in the training I do. Let me get my pen out. So you guys know the business cycle is on an 8.6 year frequency. The global business cycle frequency actually looks like this. All right. From here to here is 8.6 years. The last peak in the business cycle was September of 2015. I have all these dates. And then these are minor waves here. But what you tend to look for, certain markets top out and certain markets turn, because everything's connected. So sometimes, like this was 2007. Dow Jones U.S. Real Estate Index topped to the exact month, the top of the business cycle, because that's where the bubble was. All the capital was concentrated in the U.S. and in the real estate sector, but that was the main market that peaked with this turn. And then you had a minor wave. On this turn here, you had actually real estate bottom to the month on this cycle. This was 2011 down here, and you had commodities peak on this turn. Gold peaked in 2011. It was like a month off. And on this turn, we actually had a collapse in this wave has been about the collapse in the confidence in government and government corruption. And you've seen that manifest from Ukraine stuff started to roll over first, but you know, everything, all the separatist movements in Europe, obviously the populist stuff with Trump. But Russia invaded Syria to the exact month on this turn. So that just for 4 years, that's going to be the main focus. Where was I going with that? Oh, the 8.6 year frequency. This is a frequency though that exists on all time frames, and so I was just pointing out here 1, 2, 3, 4, 5, 6, 7, 8 days, and you've had an 8-day run up since this move, so it kind of coincides with this stochastic oscillation also. So we're coming up on a minor turning point in 2018 here. So we'll kind of see what markets, if markets kind of have a turn. You know, stocks have been in a pretty clear rally for most of this move up, most of this cycle. Gold's been pretty sideways. So you tend to get big turns in the markets at these turning points. These are the minor ones, and then these are obviously the major ones. Have you guys heard me talk about that before? You want to look at NEO? NEO is fine. Still in an uptrend. It's too bad coinage is not sinking. When I put a buy limit in or something, it's not, when I buy, the arrow's not going on. This week it's not working. This daily cycle is kind of high now on NEO. Doesn't mean we have to go down. It just is what it is. I mean, this is why I was taking profit on this move up here. But it's still in an uptrend. I mean, when we look at our trend following stuff, what I call the TMS, so the breakouts here, this is a BCI in our model, bullish candle ignored. It tends to mark the middle of the move, which it pretty much did. This is the start of the move. This is the peak of the move, kind of in the middle. It's one small little candle that just sits on its own, and the bulls take it out. The bullish candle that gets ignored. Or, sorry, bearish candle in this case. When you're on an uptrend, it's the bearish candle that gets ignored. But we had a higher low here. So this was all uptrend, like this. And then when we took out this low right here, that created this deeper pullback that we had. All right. These are lower highs. I draw those in yellow because you were still making a higher low here. But when you took that low out, that set this whole thing in motion. But we talked about getting above that trend line, getting above this high. This is the start of the move up. So we're still at the beginning of this bigger cycle, I think. And unless we come back and take out the low of this candle, this igniting candle, you still got to think this way. It might have tried, Cameron. It's just, a couple trades I did today, it's still fouled up. I'm sure they'll fix it. Go to orders. Hey, John, thanks. Go to orders, refresh. Is that over here? Open orders? I think I got it. Top left next to balances. Oh, over here. Oh, gotcha. Always refresh. Let's see. I don't know. Right here? Let's account balances. Not worried about it. What else do you guys want to look at? That refreshed the whole app. Maybe that did it, huh? Quantum. We had another sale in here. Quantum one, pretty strong chart. This is one we need to get involved on. I don't have a whole lot. This has been a really nice cycle. I mean, this is just, look at this cycle. It's pretty good. Nice move up, back down, back up, back down, back up, back down. There's a nice swing line here. You guys know what a swing line is? You can follow the prior candle's close. So when you're looking at a downtrend, look at that prior candle's high. And you can see that as soon as the candle takes out the prior candle's high, even right here, you didn't quite take out the intraday high on this candle. It didn't happen until right here. Boom. That's called I call that a swing line. Essentially what that is you're following, this is a daily chart, so you're kind of following the hourly trend of lower highs, and then as soon as you take out that swing line, boom, buy there, stop below the low. And you can follow these swing lines in an uptrend. You can see here, you don't violate the prior candle's body high, or you can sometimes look at the intraday high. But you can see here, there you took out the candle's body, the high, where it opened. And you took out the high of the intraday. Didn't quite take out the intraday high there. Right there you did on this candle. So just following that swing line, this is kind of one of the way you teach, I don't know, amateur or beginning traders. See, I like to scale in, so I'm not afraid to start buying, but then I get heavier on this side of the cycle. But when I'm teaching like first-time traders or someone that's kind of new, that may be trading technically, or they're new to scaling in, tell them to wait for the right-hand side of the cycle, or the right-hand side of the chart. So instead of buying here and buying on the way down, because they're not as comfortable with learning how to work a position. They don't like work, because some people don't like dragging this They don't like, they're not comfortable being in negative territory. I tell them to wait for the swing line. So you just wait for that swing line and then you buy. And I still do that, but this is where I get aggressive when you take out the swing line. Here's another one. You guys see this? Boom, buy that candle right there. You didn't get any real follow through on this, but that's a way to wait for the pullback and then boom. I think I had Binance open. I did before. Anyway, I like this. We're in an uptrend here. This has been a pretty good cycle, hot move up already. I like quantum down here. Kind of wish we would have bought some. You're still making big picture lower highs. Maybe you're going to make another one here. But at some point when you change this pattern, then you have a lot of clear sailing. We'll see. It's getting closer to looking like it wants to go. Maybe we have another cycle down. It gives us another chance to buy more down here. Yeah, weekly charts pretty useless. Well, you're back at pi on the 4 hour. Failed exactly at pi earlier in the week. Struggling to get above there. That just kind of shows you the big picture. It's not in a ripping uptrend. Being below pi is indicative of a bear market, actually. But that's the intermediate term. So, sure, Tyler. That's a good one. You can use that on anything. Once you can start to identifying those, swing lines. What were you asking about? I don't have finance. One second. I just opened this account, so I'm not as fast trying to remember my login and stuff. Alright, I guess I'm still logged in. There, you guys see it now? This chart, let me refresh. This doesn't look right. That's a little better. I'm not really quick on this chart either. Like, there should be a way to close all this gap. This is just, I don't know why it does that. There's probably a way to drag that. But it doesn't really matter for as far as what we're doing here. The direction, as far as the analysis, as far as direction is concerned, we broke out here for earlier in the month, or end of last month. So definitely in an uptrend. I didn't want to chase it up here. Some of you guys, I think, were taking profit, which was the right thing to do. Now we're getting a little bit of pullback. I think I haven't even messed with these charts. I think this is the 8 or the 9-day moving average. But that's the trend we're on. So we bought a little bit. I'd actually like a pullback. See, I know most kind of amateur or novice traders, they never want the market to go against them. As soon as they buy something, they just want it to immediately go in their favor. But that's really not the way to trade. When something's extended, you want to have a smaller position on it. Because that way, if the market does pull back on you, you can sit through the pullback and you can buy lower at lower prices. We don't want to get caught high at high prices, because then most of the time, if you're really long up here, by the time it pulls back here, those people are going to be puking and selling, and that's the exact time that you want to be buying. So WTC is definitely in an uptrend. I don't use a MACD, but that's a lot of people do. That's in their favor. I don't have a stochastic on here. I got to do some work on this company's setup. But I'd like a pullback back anywhere back in here. The deeper, the better. I mean, I'd love to buy back here. I don't think you're going to get it. I think we'll probably hold here and then take off. And see, that's the thing. When I only have a small position on, I don't want it to just take off on me, because then you don't get the size on that you want. It's just a different mindset. I mean, this is in an uptrend. You want the pullback. I mean, if we go up from here, I'm not even going to care about it. It's going to be so small. Let's see what else. Metal. I signaled to our group, and John, I'm not sure if you're part of our team or not. Everybody has different handles sometimes, so I get people confused. So I apologize if you're in there. But what we were looking at was a break of this trend. So you have a trend via higher lows. That's what defines a trend, right? It's just higher highs and higher lows by definition. It's not about moving averages. It's just picking out what I call the term structure, the TMS. And you care about the higher lows when you're in an uptrend. So here. This higher low broke, but I have something we call wave formation bands, and I wanted to see us hold these bands right here, and we couldn't do it. So I went to the sidelines, that down arrow. That's me selling all of my position earlier this week. And some people have a tough time doing that. The way I think of it is, I see some risk in the market. I have no problem going to the sidelines. I mean, yeah, you pay a little bit in commission, but so what? It saves your capital from a bigger drawdown. So it looked like maybe we were going to recover Tuesday. Didn't happen. Still making lower highs. So I kind of think there's risk that you go back to these levels down here. And that's like a 30-40% drop. So when I see that railroad track and that train's coming down, I mean, the smartest thing is just go to the sideline, let the train go by, and then you can always get back on. So I'm waiting. I want to see us start to make higher highs again. I mean, the cycle's low, but I don't like this breaking trend. So I always care about price, and then I care about time. So price is the trend, time is the cycles. And the cycle's okay, but the trend to me is no longer in a big picture uptrend. So I'm out of that one. And we'll see. If we test here, I might rebuy down here. Depends on how it gets there. And what it looks like then. I think you have a hard time getting below here. I'm not even sure we'll get back to these lows. In my model, there's just no reason for me to stick around when that happens. So that's how I'm managing my risk. If we turn back up, I'll just get right back in. Okay, see? All right, John. See, I kind of thought you were one of the newer Johns in the room. All right, cool. So you saw my signal then on metal, right? Are you still in it? You saw me talking about it. I did a video being just going to the sidelines there. Doesn't mean you have to. That's just what I see. Scott, what's a good indicator of change of direction when the market's rising? It's a good question. Well, let's look at something like, I don't know, let's look at Litecoin that's had a big move and then popped out, right? Or you don't even have to look at crypto. We could look at something like Amazon. But so a couple things. When you're in an uptrend, a couple things right off the bat that you're going to want to care about is angle and distance. So some people have this is the thing, like one of the things that kind of bothers me when people trade with targets. People like to buy and then say, all right, I'm going to sell at this price and this price and this price. There's a couple things that are wrong with that, because one, if you set your price target and what if the market just trades $5 short of your price target and then collapses, you know, you kind of feel like a monkey's uncle. It's frustrating. But also, when you just set a price, you're completely ignoring how a market gets there. Like how a market gets to 100 matters, right? Like if it just crawls to 100, that's a steady bull market. There's nothing there that tells me to sell. All right. But if a market goes vertical, you got to be a seller, because that's just not sustainable. Energy can't go like this forever, right? You can only bounce a ball so high before it comes back to, you know, earth. You can only raise your arm in the air for so long. I mean, I hung a chandelier last night. My girlfriend wanted me to hang, and I was miserable. You can only stand there for so long, you know, before your shoulders are on fire. Same thing in the markets. I mean, people, like, I hear that too. I used to talk to hedge fund guys. At the end of 2016, growth was slowing. GDP went from 3.2% GDP up here at the top of the cycle. And in 2016, we slowed all the way to I think it was 1% down here. So the cycle was rolling over and growth was slowing. And I was telling a few of these guys, the cycle is slowing. And they're like, oh no, business cycle, no. You need to have a catalyst to make something go down. It's like, no, you don't. Put your arm in the air and see how long you can keep your arm in the air. You don't need a catalyst. It's just energy. So when you look at angle and distance, that matters. So this is a lot of angle, right? But I mean, there's a lot of markets in crypto have a lot of angle because it's such a strong bull market. It's the most bullish market on the planet. But you can see on the smaller time frames, this is a lot of distance. There's a lot of distance from that 8. That you see this red line? That's your 8 period moving average. When you get that much distance, you got to be a seller. That's easy. You don't need anything else. You can just look at that distance from the 8 and the angle. I mean, it's almost at 12 o'clock, right? You just have to be a seller up there. Doesn't mean you want to go short, but you got to be coming out of some of your long. So that's one of the things, angle and distance. When the cycle gets high, let's see. In a smaller time frame. We can come back to GNT. I was just trying to touch on this for Scott. And then, so cycle matters. So time, right? You want to be a seller when you're at the top of the cycles, depending on what time frame you're playing. And then the trend. So change when the market's rising, so you can look at angle and distance. But the biggest thing is you got to start making lower lows. So I teach this a lot. When you're in an uptrend, some of you guys have probably heard this a lot, but there's your uptrend, right? There's only 4 ways a market can top. If you guys knew that, it's simple. There's only 4 ways. There's 2 versions of the same, but it's just a difference. You can have a head and shoulders top, where there you have a higher high, then you fail to get back to the prior high, and then anytime you stop making higher highs, that's always the first sign that the market's rolling over, because the market starts to get tired. But a market can go like this, fail to make a higher high, and do something like this, and then go to a new high. So what you need to watch is the lows. You got to watch the higher lows. As soon as you break and you start to get lower lows, that's what confirms that the market's changing direction. Does that make sense, Scott? Have you heard that before? So you can have head and shoulders. You can have a V top, which is where you get a new high and then you go right to a new low. Those are the toughest to catch, or a V bottom or a V top. Then you can have like a basing top or a double top or a triple top. That's kind of where you make equal distant highs and lows, and then you break to a new low. Or you can have what's called a W. I call it a W, which is not quite like a head and shoulders. Head and shoulders, you have an equidistant lows right here, and then you have kind of this shoulder kind of matches this shoulder. A W is where this low is higher than this one, and then you get the lower high, and then you break. That's really the only 4 ways a market can top and bottom. There's different variations of this one. You can have 2. You can have a double top, and then there's a variation of the W where you can get you could get this low to be. You could get this high like this, and then have this high be a little bit lower than this high. It's the same thing. These 2 are very similar. That's really it. Okay, good question, Scott. So yeah, you got to define your trend. So I like to break things out in duration as far as 3 time frames: near term, intermediate term, and long term. So when I'm talking about like day trade stuff, I just looking at a 1-minute chart, 5-minute chart, 15-minute chart, 30-minute chart. Intermediate term, 1 hour, 4 hour, daily, and then long term, I'm looking at the daily, weekly, monthly, quarterly, or yearly chart. Most charting platforms don't have a quarterly or yearly; they just go monthly is the highest, which is fine. Daily, weekly, monthly. So depending on and that's the thing, is you got to realize, right? There's smaller trends within larger trends. If you think about the water in a canyon, there's the major long-term flow, which kind of winds through the state. But then you might come around the corner and you're going to have a lot of back and forth between the left side of the canyon to the right side of the canyon, and then within the river, you're going to even have different directional flows. So within the long-term trend, it's possible to have an intermediate-term pullback. Like here on Litecoin, we've had a long-term uptrend, and then you've had an intermediate-term pullback in the downtrend. And then you might even have one day an uptrend, one day a downtrend, near-term, another 2 days downtrend. An hour later, you might have an uptrend in the near term, another downtrend. So you got to kind of define what time frame. Like somebody asked me, well, are you bullish Litecoin? Well, my answer is, well, what time frame? It could be in a downtrend today, or intermediate and pullback the last 2 weeks. or are we talking about long term? So you got to define, once you define the time frame you're looking at, then you start to contextualize the price and the cycle. So like here on the weekly, this is a long-term uptrend because you're making higher lows. This started it. This started this most recent move up. Higher high, higher high, higher lows, higher lows, higher highs. And then you want to look for the higher lows at or near. I like to use a 30-day moving average. That's not on this chart. And I also use these bands. So a lot of times you're going to get the higher lows in the middle of the bands or at or near the 30-day, not day, the 30-period moving average. And then I care about higher lows at the bottom of these bands, just like I showed you on metal. Because metal couldn't hold this band. Like that's why I care about the higher lows. I don't care about a higher low up here. That's too high. Like if the market gets really momentous and makes a higher low here, I don't want a higher low that's way away from the 8. This higher low up here doesn't really define the trend. It would be a higher low closer to the 30. Anyway, that's kind of the best way to describe that. You guys want to look at Gollum? Yeah, Lawrence, you're welcome. Jason, I'll get to your question in a second. Tyler, you were saying GNT. All right, I'll have to grab a water. I've been talking a lot today. GNT. Here, give me one sec, guys. My throat's kind of getting scratchy. How's the audio today, guys? Is it better? We tested it a little bit. There was kind of an echo in and out. Hopefully it's all right today. Gollum's been pretty quiet. Not a lot of people talking about it. You know, that's how you want it. That's what you want. You want it to get sleepy, everybody forget about it, and then you can quietly go to work and start accumulating. So let's see. GNT broke your stop loss today. That's okay. Stops are there for a reason. I always tell my guys, like, just because you took a stop out doesn't mean you did anything wrong. All right. There's right action and there's wrong action when you're trading. A right action is you stuck to your trading plan. You bought when you were supposed to buy at a breakout or at the right place. A wrong action would be buying Litecoin underneath 100 when you're completely extended. You missed the entire move. That's the wrong action. So stops are good because stops will help protect your capital. You save you money so that you can get in at better price. So stop outs a lot of times you can have a right action and stop out. Just a thought on that. But your question, I think I may have not placed it low enough. Is it dumb to buy back when there's a break? I think I know what you mean. No, I mean, I do that a lot. I'll tell you guys, sometimes when I stop out, it's usually because I'm just a little bit early. And I usually know when I stop out, I'm pretty close to the low. And so a lot of times I'll stop out and that'll be it and it'll turn around and I just get right back in. You might miss a little bit of the first part of the move, but I'd rather miss out on a little bit of a move than not take a stop and I end up being right because I should have took a stop, and then the market ends up collapsing, and you would have lost a ton of money. I'd rather miss out on a little bit, and your mentality should be, you know what, I don't know, I'm just going to go to the sideline. Or I'm going to take, and sometimes if I can't decide if I want to stay in, I think I told Cameron this the other day, if you're thinking to yourself that you should get out, usually you should just take half off or take even more off. Just take off 80%. As soon as you take your risk off, your mind kind of clears. You can reassess, and then you can always get back in, guys. I mean, that's the nice thing about being smaller traders or commissions being very low. I mean, if you're a pension fund, you can't just decide to get in and out. You know, it might take you 3 months to build into a position, and you can't just turn around and sell everything and get back in an hour later. You know, you'll move the entire market, and then it'll cost you a lot. Well, we don't have that issue, so you can always get in, get out, but that happens a lot. Sometimes when I stop, I pretty much know I'm close to the low, and then if that happens, I just get right back in. Usually there's different signs. I'm not sure exactly what you were asking about, Tyler, on column here. I mean, I added. It's just not ready to. It probably needs a catalyst to kind of get things. This is just a quiet accumulation period where you just kind of you nibble, take some off, nibble back. I thought maybe this candle was going to go, and we didn't get the follow through. You have this big footprint of money, and then it couldn't follow through. It's just not ready yet. But when you start to see more of these candles, like, when you get more of these candles, that's what you'll see when the market turns. You'll see more of those. Those are the footprints of money. When you start to see, boom, there's another one, and then you get another one, and then maybe it pulls back, and then you get another big candle. I start to follow those. So, like you got one today on Omise Go. That's kind of why I bought. You got a candle like that on OMG. So I call those real money candles. You want to follow those footprints. It looked like it was going to go there. It's just not quite ready yet. This weekly chart, it's such a new asset, such a new coin. It's just, there's not a lot of helpful data on the weekly. He started to get the swing line here on Gollum too. Remember I just shared with you guys that swing line concept? Kind of got it right here, but definitely by this candle, it looked like it was ready to go. I mean, if I was heavy, like we were talking about the stop loss, was your stop below this low right here? We're kind of starting to break that. There's a swing line here on the daily, same thing. If you bought this candle, I'm okay with you taking a stop there because you're only risking one candle. That's fine. I mean, these lows matter here for sure, that we're kind of testing. So I might even take some of our risk off. I'm trying to figure out if there's another low back here. I can't really tell. What was the low opening trade? 7,000. So we're below 7. Yeah, this is a big low here. If we can't really hold on to this on a weekly level, I mean, I might even just stop and wait. Just go to the sideline and wait and see if it's going to base and Sometimes, guys, you'll run the stops down and you'll come right back up. It's just definitely having a tough time. Yeah, we could do OMG. Jason, you were saying depends on time. Okay, I answered your question. Okay, Ricky, good to know. I'm gonna keep trying to work on that. We were getting that. I don't know. Litecoin? Well, guys, I was watching Bitcoin here. These highs, I'll show you. I mean, I was a little bit cautious earlier in the week, and maybe I was wrong. I mean, to me, it just is what it is. I don't look at it as being wrong, but I didn't really like that we started to break the bands here after this daily cycle was rolling over. We talked about this daily cycle is awfully high up here, and when it crosses, to me, you want to try to catch your swing trades at the bottom of the daily cycle. So like if you bought down here, you had a nice cycle up. Well, this is played out, and I'll show you guys too. Sometimes this happens where you cycle up, and then it looks like it's going to go back down at about halfway up, and then you get another cycle move higher. That's what we had here on Bitcoin. So I don't know. I'm still a little bit cautious. I'll just tell you the signposts or the pivots that we want to watch now is this high we made earlier in the week. So you know, the fact that we made a lower high here and then the band started to roll over, thought there was room for us to go back down, but then we just made another higher low. So from here, I mean, I'll get back in if we trade above this high. So I'm watching, I guess call it 45.60. And today the market came back up to this high here and paused pretty much all afternoon, and now we're trying to break through. So that's probably what Litecoin's doing a little bit also, Cameron. It's catching a bid also. Litecoin held the lows back here, 50.5. You know, so that's okay. I'm on the sidelines in a lot of the majors. I took a lot of Ether and Litecoin off and Bitcoin, but I'll get it back on if we start to poke through to higher highs again. I don't think we're totally out of the woods yet. Let's see. You guys want to do OMG? So here's your daily. Still, this is one of the strongest uptrends. It's one of the strongest charts. You just have a lot of higher lows. Every time you get a pullback, it's just met with buying. This is the deepest pullback we've had. We haven't gotten to the bands really since inception, other than maybe when it first out of the gates. You know, here's the bands. So here's, kind of look for the higher lows in the middle of the bands or at or near the 30. If you put a 30 or 50 period moving average, it'd be something like that. So here's your higher lows. Here's some higher lows. Here's the same higher lows that held relative to this one. And then when you take that out, you get the pullback to the bands, and then this is the area I care about. So I've been buying in here, anticipating this. If they don't hold, I'm going to take off. If that doesn't hold, I'll take off whatever I bought here. I'm going to just stop out on that. I won't take off my whole position, but I take my risk down. So that's how I look at it. When I buy here, I'm only risking this little amount on these ads. And then this is my reward. And the reason I don't stop out on everything is just because this is a position I want to have longer term. So I might take off 80% if we don't hold here. But the other thing is we have this low right behind it. So I'd hate to stop out right in front of this low. If this low breaks, you might even get me bearish. It depends how it looks. But that's, that's if and when. I think you're probably going to get a higher low here. If you go to the weekly, this is just a natural pullback. I mean, we're retracing a lot of this move up. You do a Fibonacci even. We're only 38% of the way back. So even a 50% retrace is still whatever that level is, 175,000. 17 handle. Mega, you're gonna add on October 25th, or you're buying before that? Yeah, no, it's breaking out. I mean, on the intermediate term, yeah, I don't disagree. But see, everybody has that same thinking, so everybody's gonna buy over the next 2 weeks, and then, usually it takes 80% of the market. You gotta have everybody wrong, is where the market swings to. It's wherever to cause the most pain. I mean, I get the story behind it. OMG, I don't know what else I was going to say. 4-hour cycle. So the daily cycle is low. 4-hour cycle is low. And I'm just following these footprints. So I like this. I like this today. Well, we'll see. This is a pretty big low down here, 17 area. Are you just hopping on? We did Neo a little bit earlier. Neo's still making higher lows. Made another nice higher low today. So I like this one. Big picture, as long as you're above these lows right here, I mean, this is a brand new uptrend. So we got heavy here, took profit on the way up. We didn't get out of all our position, bought some back. I took some more up here. The Coinigy's not reflecting it, or I didn't do it through Coinigy. Maybe, I don't know. I bought some back here. Probably missed buying some more on this dip too. But that's one of the most bullish charts for sure. This is our biggest position. Inside bars, you mean like you can have outside days, outside reversals? I'm not really sure what you mean by inside bars. Like intraday? Or is that I'm not really sure what inside bars are. I mean, Bitcoin popped, guys, because it got above this high right here. It looks like it wants to retest these pivot highs here that we were talking about. I was just thinking about drawing a regression channel. I don't think TradingView does regression channels for some reason. I was just going to shoot a channel, a 2 standard deviation channel like this. Maybe you're going to get a move into the highs right into the fork date. I could see that. Get a move up here into 25th. From a timing perspective, it's pretty close. That's possible. Yeah, no, that's true. Yeah, that's true. It's a nice thing about crypto is you can still track the volume a lot. I mean, the dark pool stuff, like if you look at the stock market, there's so many dark pools, or like the treasury market, you can't even look at the volume. It's not helpful. There's so much volume that's not tracked that it's so hard to tell. But these markets, the volume's pretty good. Pretty helpful, actually. I don't use too many other indicators. I try to keep it simple. I think too many people, they got too many conflicting things on their chart. One thing tells them they're bullish, another thing tells them they're bearish, and they just end up confusing themselves. The simpler trading's tough as it is, the simpler you keep it. But there's other things that help. I mean, the MACD to me is always kind of seems a little bit lagging, but it's pretty good. I mean, I've used Trenders before. I've used Tom DeMark's stuff. He's got a pretty expensive service. He's kind of popular in the institutional community. I just developed my own deal here. You know, there's one way I view the trend. This oscillation I've found to be the best rhythm to help with the cycles. You can pay for data and overlap even bigger cycles and do it that way. This is more of an oscillation. I just kind of keep it simple. It really kind of comes down to working your position matters more than having the best indicator. Look at ARC. you get a big bar and then the futures bar trades in its range. I'm not sure. I'm not sure, Adam, on that one. No, I didn't do anything on Vertcoin, John. I mean, I would signal that if I did. I saw we were moving up, but I think there's more to come. So, and it's a smaller position for me, so I'm not in any hurry to kind of take on that one. What exchange is oh, it's on Bittrex too. I like the 4 hours back towards pi, so right just off the bat right there, I'd be a buyer. It's had a good cycle all the way back to my pi line. I think, yeah, this is bullish here. This looks pretty good. I might get in on this. Bullish. That started your move. This is the largest candle on the chart. That's power. That just shows you the big, real money push to create that. You know, the swing line right here. Boom, buy. You got nice follow through. Take profits into this high. Boom. Another swing line. Add back. This was a nice run. Then you create angle and distance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 8's a number I care about. 13 is another derivative, another cyclical number. So depending on when you want to count from, I mean, you're almost 13 days up into the high. You create angle, basically pointing at 1 o'clock, and then you get way above the 8. You got to be taking profit up there. And then I teach this wall concept. You look what started this move, and you treat that as one giant candle. If you just compressed all these time frames into one bar, it's one giant candle. About halfway is a lot of times where the market will make a higher low. So you're in the buy zone. Cycle's low, RSI is pretty low. This is good buy location here. A weekly cycle. Not a lot of data here, so but anyway, that's still coming down. About the 4 hour looks good. Maybe be a buyer there. Let's see if I got some capital put to work on that one. Thanks, Mega. Appreciate that. You're in down here? Nice. That's low. I like it. And you guys, I mean, if you guys can, I mean, try to buy in multiple lots, you know. You don't want to just plunge in at one price. I'm sure you guys know that. But this is great location here. From here, you do not want to see that low break though. Like, I don't treat this as one specific level. You got to look at these as areas, like a chain link fence or like a boxing ring. You can push against the ropes, you know. You can push against the chain link fence. So I don't treat this as just like, oh, it's below the specific level, I'm out, it's bearish. I mean, this is an area. But when you do get in and you do dip below, like you get below the bands here, and then you have a bottoming tail, you come back up, that's a pretty good line in the sand now that you know where your risk is. So if the bulls can't keep it above that low, that's a sign that there could be trouble. So anything you buy in here, I mean, I will use that as a low too. I'll use that as where my stop is. But you're basically just risking this one candle, and look at all the upside you have. That's the right way to trade. And if you were buying and nibbling in here, that's okay. But from here, what you do is you try to look for something to kind of sink your teeth into. Like you'll notice here, you still have your swing line in place. You can't get above the prior candle's high yet. So if you get something like this candle that takes out the swing line, then you might get aggressive. And if you get aggressive on that type of setup, then I know where my risk is. There's high probability. There's really good edge here that this is going to be it. There's going to be another leg up. But anyway, guys, I'll probably call it good there for today. If any of you guys, I don't know sure how many of you are new to our team, but this is the kind of stuff that we do every day. I mean, this is just our portfolio that we track. But I mean, this is the kind of consistency when you have a model and a process, and the right model and process. I mean, it took me 10 years to build, so it just comes with a lot of time in the chair. But if you guys want to join our crypto group, or I mean, we're just talking mostly about cryptos here, but I mean, I trade Forex every day with my Forex team. You just go to jenkinsrm.com. We have a prop program, but you know, I'm a treasury trader. I was a bond guy for 10 years, so. But anyway, those of you that are interested in crypto, this right here, Crypto Coin Team. I mean, I try to make this as cheap as it gets. This is $100 a month, and it's pretty much every trade and signal that we do that's signaled from the model. So it doesn't get cheaper than that. I mean, I had institutions that paid me $5-10 grand a month to trade with me and me to cover them and trade on the model. So this is $100 and you get the same signals. But that's just the chat room and the buy and sell alerts. If you really want to learn the model and the stuff that we're talking about today, I'd just encourage you. I mean, it's one thing. I mean, that's what's great about trading, guys. You can do it from anywhere in the world. You can work on your own, but you know, I mean, I'm completely free. I don't have to go to a job every day. But so if you want to learn to trade and you want to own that skill for the rest of your life, I mean, I never wanted to be dependent on somebody else. You know, like a guru, or I didn't want to have just one trading bot that I bought and then it stops working because the market changes and then you don't have anything to make money from. You know, you don't have the skills to every day step into the market and you can take money out of the market. That's learned. So if you want to learn that and get to that point, I would encourage you guys I put everything that, you know, all the dead ends and everything I went down, all the struggle and process and going back to the drawing board, all that is in this program. And then if you want to work together on a closer level, this is on the group coaching and mentoring side. That's taking it to a whole different level. And I really work with you on your trades. I mean, I have a trader today. We walked through his entire pound yen trade, and he probably learned like 10 lessons in one trade because I broke it down for him what he did wrong. So anyway, guys, we'll try to do more of these. Yeah. Hopefully I added some value. You guys got some good stuff out of it. But all right, guys. Well, enjoy the rest of your. The nice thing about crypto is the trading day never really ends. So we'll see if Bitcoin can keep pushing, and hopefully we'll see some of you guys in the chat. And we'll talk to you guys. Have a great rest of your night. All right, Lawrence, Scott. See some of you guys in the morning. All right, Tyler. You're welcome, buddy. Talk to you guys.